Good day to everyone. Today I shall be talking about the monetary policy of Saudi Arabia. This country is present in the Middle East, and this kingdom has an absolute monarchy form of government and is currently ruled by King Saud. Today, I'll be talking about major points, including what is monetary policy, economic numbers, Saudi Arabia monetary policy, key prospects of the policy, the pegged exchange rate regime, the details of this policy, the challenges, and the conclusion. So let's get started. So what is monetary policy? Monetary policy refers to the central bank's action to regulate the money supply and interest rates in an economy to achieve macroeconomic objectives such as price stability, full employment, and economic growth. Through tools like open market operations, reserve requirements, and discount rates, central banks influence borrowing costs, liquidity conditions, and ultimately economic activity. Tightening the monetary policy involves reducing money supply to curb the inflation, while loosening it involves increasing the money supply to stimulate economic growth. Let's go forward. If you look at the numbers of Saudi Arabia's economy, Saudi Arabia stands as a key economic player, leading in the Middle East, ranking 18th globally with a staggering $1 trillion economy. Despite economic diversification efforts, its growth rate remains robust at 3.2%. However, a notable challenge is the 7.6% unemployment rate, signaling the importance of job creation initiatives. The nation heavily relies on exports, totaling $287 billion, with China being its largest export destination at 20%, followed by South Korea at 9%, Japan at 5%, and USA at 3%. Conversely, Saudi Arabia imports goods worth $213 billion, with India representing a significant portion at 18%, followed by UAE at 13%, USA at 9%, and Japan at 4.7%. Japan's Saudi Arabia's economy is predominantly fueled by petroleum industry, including crude oil production, petroleum refining, and petrochemicals. Other sectors include aircraft repair, ship repair, metals, fertilizers, cement, etc. Talking about SAMA, or the Saudi Arabia monetary policy, it is overseen by SAMA, centers around maintaining monetary stability, ensuring the stability of Saudi riyal, and fostering a robust financial system. Central to this approach is the fixed exchange rate regime, providing stability for international trade and investment while guiding monetary policy decisions. Saudi Arabia's monetary policy is characterized by several key aspects that aim to maintain stability and foster growth within the economy. One cornerstone of this policy is the exchange rate regime, where Saudi riyal is pegged to the US dollar by the SAMA. This fixed exchange rate provides a stable and a predictable environment for international trade and investment, enhancing investor confidence and facilitating economic transaction. Additionally, by pegging the currency to the US dollar, Saudi Arabia can effectively manage exchange rate fluctuations and mitigate currency risk, further supporting its economic stability. Another crucial aspect of Saudi Arabia's monetary policy is the banking regulation and supervision, overseen by SAMA. SAMA plays a pivotal role in ensuring the stability and the integrity of the banking sector by implementing regulations related to capital adequacy, risk management, and governance. These regulations are designed to mitigate systematic risks within the financial system, safeguarding against potential threats to financial stability by maintaining a robust regulatory framework. The real is fixed or pegged to another currency or a basket of currency. Historically, the Saudi Arabia real has been pegged to currency to the United States dollar. Here are some key details regarding the pegged exchange rate system in Saudi Arabia. Fixed exchange rates. Under the pegged exchange rate regime, the Saudi riyal value is fixed in terms of another currency, typically the US dollar. For instance, if the exchange rate is fixed at 3.75 real per US dollar, it means that $1 is equal to 3.75 Saudi riyals, and this rate is maintained by the SAMA itself. Currency baskets. While historically pegged to the US dollar, there have been discussion about diversifying the peg to include basket of currency to reduce the dependency on one single currency. SAMA is responsible for managing the pegged exchange rate system. SAMA intervenes in foreign exchange market by buying and selling foreign currency, particularly the US dollars, to maintain the fixed exchange rates. Adjustments. While the peg provides stability, it also limits the flexibility of the monetary policy. In some cases, the peg might conflict with the domestic economic objectives such as controlling inflation or addressing economic imbalances. Saudi Arabia's monetary policy rates typically track the movements of the US federal funds rate, reflecting the country's open capital accounts and pegged exchange rate regime. This adherence to US monetary policy is driven by the Mundelein trilemma, which restricts the substantial deviations in SAMA's policy stance from that of the US. Operationally, SAMA employs various tools, including policy rates, statutory reserve requirements, open market operations, direct deposits, and foreign exchange swaps. In recent episodes, SAMA adjusted its policy in line with the US federal law reserve normalization. SAMA has recently adjusted its policy rate in tandem with the US Federal Reserve's normalization effort despite lower inflation in Saudi Arabia compared to the US. This adjustment reflects the constraints imposed by the currency by PEG framework, compelling SAMA to align its nominal policy with that of Fed. Liquidity in Saudi Arabia, defined broadly as a subset of SAMA, domestic currency liabilities available for payment purposes, largely correlates with external and fiscal surpluses during the periods of high oil prices. Excess reserves at SAMA reflecting this liquidity exhibit a clear relationship with real oil prices. From 1993 to early 2000s, the real oil prices have remained stable at constant at $25 per barrel before increasing in 2003 and consistently exceeding $40 per barrel since 2004. The liability rate is defined by interest expense scaled by interest-bearing liabilities, whereas the asset rate is measured as a total interest income scaled by the interest-earning assets. The Saudi banking system is not isolated from the changes in the SAMA monetary policy, and both rates tend to move in line with nominal policy rates. The challenges faced by this monetary policy is the first, exchange rate stability. Maintaining the pegged exchange rate to the US dollars requires a significant foreign exchange reserves and an active intervention by SAMA, ensuring the stability in the face of external shocks and speculative pressures can be challenging, especially during the periods of heightened volatility in the global financial markets. Second is the oil price volatility. The Saudi government's heavily dependent on oil exports, making it vulnerable to fluctuations and global oil prices. Sharp decline in oil prices can strain the government finances and foreign exchange reserves, impacting an effectiveness of this monetary policy. Saudi Arabia is undertaking ambitious economic diversification initiatives to reduce its reliance on oil revenues and promote non-oil sectors such as tourism, manufacturing, and even technology for that matter. However, diversification efforts may pose challenges to monetary policy transmission mechanism and require adjustments to policy tools and to support emerging sectors. So in conclusion, it is evident that the policy rates in Saudi Arabia are closely in track with those of the United States due to the pegged exchange rate regime. This alignment extends to the liability and the asset rates of banks, emphasizing the interconnection between the two economies. However, our findings underscore the significant role of the oil prices in shaping the impact of the changes in the US interest rates on Saudi Arabia's non-oil GDP growth and banking sector performance. Therefore, while synchronizing the policy rates between Saudi Arabia and the US challenges, the resilience of this kingdom's economy, buoyed by the oil prices and prudent monetary policy development, is expected to mitigate any adverse impacts. That's my time. Thank you so much.